What advice would you have for somebody that's listening to this or watching this and they're, 25, 26, they hate their job,
hmm
they're highly educated, they got master's degrees and they're like, "Man, I want to be an entrepreneur. I want to do my own thing." Like, and they want to get into real estate. Where would you tell them to play? Would you just say, "Hey, get a mentor, get into like the duplexes, fourplexes, multifamily space?"
For me, that worked great. I know some other people who jumped in and did 10 units when they started, and I know other people who did $40,000 homes to start. And so I think it's going to depend on, okay, who do you know right now, and what are those people doing? What do you want your life to look like? And the first thing you need to do is just get in the room with those people. I don't care what you have to do. You got to get in the room with people who are doing the things that you want to do. And that could be spending money to be in the room with them in a mastermind. That could be buying 20 books and reading them in a 12-month period, watching YouTube videos, whatever it may be. You need to get in the room and learn from people who are doing what you're doing. Nobody can just jump into something and figure things out on their own. Everything in real estate is a team. And so you've got to be able to get around people who are doing it. I guess that's the summary. You got to get in the room with people doing big things that you want to be doing.
Hello and welcome back to another episode of the Investor Financing Podcast. Today's show is going to be pretty cool. We got a young entrepreneur got into the medical world and realized that wasn't the right route for him. He wanted to be a physical therapist, and even during school, I believe he started buying multifamily properties, and so he always had an interest in real estate, and then kind of was thinking about everything and said, "You know what? Let's do real estate full time. It makes a lot more sense." All the people around him were very smart people, obviously, in the medical field, but he saw that they weren't very happy and they were working 18-hour days and they didn't really have a life. And so please welcome Ryan Corcoran to the show. He's based in Rhode Island, so on the other coast here. And let's get started. So welcome to the show, Ryan.
Thanks, Beau. I really appreciate it. You nailed it on the head there with that intro. So great job.
Yeah, well, everybody always wants to hear the backstory, right? So I say, well, if I just give high levels, we can dive into the meat and potatoes. So just walk us through like when you're in college at the university and what was the first investment? Was it kind of a house hack or how did that play out?
Yeah, so I was about to graduate my undergraduate studies in exercise physiology, and I thought, like you said, I was going to go become a physical therapist. I ended up changing my mind and going to get my master's as a PA. But right before I went and did that, I'm living at my parents' house. I'm about to go to my master's program, and I'm like, where am I going to live? Am I going to live in my parents' house? Should I rent somewhere? So, ultimately, I sat down and I looked at everything, and I'm like, okay, I can stay at my parents' house, save money, but what if I could like buy a piece of real estate and then rent it out, and that would pay for me to live during school. So at the time, my uncle had dabbled in real estate, owned a construction company, and so I went and chatted with him for a while, pretty much every weekend for like 6 months straight. And we basically taught me everything he knew about multifamily real estate. And so the next thing I know, I was buying a duplex that I thought I was going to live in, ended up renting it out, and kept it for about 2 years while I was in my doing my master's program. So yeah, it was going to be a house hack initially, and then it turned into, hey, let's just rent this thing and keep it going while I'm in school.
So when did you quit your W-2 job and like go full-time real estate?
So I graduated my PA program, it's almost 2023. So in 2019, and I worked about a year and 8 months, almost 2 years as a PA. And during those 2 years, I had accumulated just about 100 units. And so right at almost a 2-year mark, I had stopped being a PA, and I dove right into doing real estate full time.
So you had about 100 units. That's as LP and GP combination?
That is GP, 100% GP. I still to this day, I have not invested into as an LP in any passive investments.
So guys, if you guys don't know what a GP is, a general partner means he's the operator. He's not the limited partner. A lot of people you hear out there talking about how they have 5,000 units or so. A lot of those people are LPs, and also they're GPs, but they own a very small share. So you just got to know the difference if you're listening to everybody, because you hear a lot of people talking about how many doors they own, but I think it's more important about, at the end of the day, net cash flow, right? Like,
yeah, 100%, 100%. Yeah. I mean, when I say I GP these, I own anywhere from 100% some of these to the lowest one I own 10% of. And so none of these were syndicated. I did it with partners. But initially, when I had no money, it was all right. Let me go out and find these deals and bring them to people who knew what they were doing, and I would get a little slice of the equity. And so the first 100 were like that. The next 150 were majority me and one other partner. So 50% ownership or more on the rest of those. Again, I still haven't syndicated to this day. I've raised a bunch of money, but I have not done a syndication. And because, up here in the Northeast, a lot of the property composition is, you've got these mix and match 13 unit buildings or 16 unit building that doesn't look like it should be 16 units inside. They're kind of chopped up. There isn't really like 50 unit apartment buildings, 150 unit apartment buildings. Like there's not that many of them. And so, I've been able to get creative around here in the medium size multifamily space, raising some private capital and using conventional loans and creative finance and all that kind of stuff. So that's how I've been able to do it so fast. But I agree, man, the door count doesn't really mean much. And initially it meant a lot to me because it meant I was progressing. But now I look at it, it's like, okay, how many doors are it's just a number. Like it doesn't even matter, right? What really matters is, what is the life you want and set it up that way, regardless of how many doors you have. And so yeah, agreed.
Yeah. So with like these 250 doors right now, you're pretty much, in theory, you could just live off your net income, and you could live a decent life and not scale anymore. Obviously, you're 28 years old, right? So, but you've accomplished a lot where you're financially free at 28 years old, which is super impressive for anybody out there. 28 years old. There's a lot of people that are 60 and 70 years old that are still working because they don't have passive income.
Yeah. Yeah. I think something to keep in mind though, when I say it, or when somebody else says they have 500 units or 50 units or whatever the number is, you have to remember that when you buy a property, typically it needs work, and typically they might make a couple $1,000s a month, but you got to build a reserve, and then something breaks and you got to deploy that money that you just made back into the property. And so for the first year, you don't really see much of any money come in. After that, once it's stabilized, okay, you can start to see some stuff come in, but it's not like you can, at least from my experience, like I don't live on that. I've never taken a draw from any of that, actually. Like the majority of my income now comes from other active income sources, and I keep buying multis and do cost segregation study, all that kind of stuff to keep my tax burden down. But all that rental income I actually don't live off of, and I find it really hard to, hard to believe that some people actually can do that unless they're they have no debt on it, and these things. I'm sure you understand, but when you have some income coming in, it gets dumped back into the property at some point.
Right.
So I try not to pull it out.
Yeah, I mean, I think the real play in real estate is to hold long term, and you really create the value when you 1031 exchange or sell the property, right? Like, because that's where,
Absolutely.
because on these older multifamily and these single families that some of us are doing, I mean, there's always CapEx that need to go back into these properties. So the real play is that, you buy it for X, you increase rents and values become X, your net worth increases significantly. And then at some point, you take that equity and roll it into other, like, more high cash flowing properties that might be less labor intensive. Do you outsource all your property management, or is this something you do in-house?
I managed one property, and it was the first one I ever bought. And after that, I've outsourced it. I felt that was, to me, I wanted nothing to do with that. It would drag me down. It's a very heavy task, as some would say, right? And so I outsource all of that. Some days it's great, some days not so much, because at the end of the day, no one's going to care for your property like you do. And so I catch myself. For example, I had a $2,000 oil bill last month, and I'm looking at this and I'm like, there's no way. But if I didn't look at that, it would have just fallen through the cracks, right? Luckily, one of my staff members, brought it up and was like, hey, this is, it's a little interesting. So we reached out, and it ended up being like half as much, right? And so just stuff like that $1,000 a month is almost a month in profit for a property, right? So you have to be careful with that kind of stuff when you have third party management that you likely wouldn't have when you're doing it yourself. But by having third party, it allows you to continue growing and going to find more deals and raising money and building a business. So yeah.
Yeah, that's cool. So what do you do for your active income?
All right. So we flipped about 20 homes this year. We did about 10 to 15. How many did we do? Roughly 13 wholesales. We got two more in the pipeline. So I don't know if they're going to close before that. We do development and then some consulting. So between all that, there's plenty of active income coming in. And the problem actually is the end of the year, when you have all these consulting fees and flip income, you have a massive tax burden. And so by having these multifamilies and being able to do accelerated depreciation and cost segregation studies, I'm able to really minimize that and continue to grow the active income source. When I started buying property, I thought I'm going to buy a bunch of rentals and I'm going to live off the passive income and everything's going to be great. But then, as we talked about earlier, it's really hard to pull money out of those because they don't actually make that much money. So how the hell can I quit my job if I can't even pull money out of these rentals? And so I decided that instead of buying, when I got to 100, I'm like, I'm not really making that much money. Like, what do I get? What do I have to do here? So I realized that, scaling up my actual business side of it instead of the multifamily side was the way to go. And then I can take that profit and just continue to buy multis at a much faster rate. So
what are you guys seeing in Rhode Island in the markets you're in? Like, for example, we're on the West Coast, and like I know like the single family space right now, a lot of the flippers that I lend money to, they're getting haircuts right now on a lot of the stuff in like Oakland, California. I'm seeing it all over like California. I know like where I'm at right now in Las Vegas, our median price is down 65 grand over the last 4 months. So what are you guys seeing in your markets?
So good point. I don't flip single family homes. I did one single family and one condo. Other than that, I don't do anything single family. And so my logic is that if I buy a duplex, let's call it for whatever, 250 grand. And when it's done, right now it's going to be worth 450, let's say. If the market drops 10, 15, 20% and it's worth in the threes, well, guess what? I can stick 2 tenants in there and cover everything and then some. And so really the flips I've done have been either 2s, 3s, or 4s or 6+. And so my real bread and butter and the people up here in New England, New Hampshire, Mass, Rhode Island, where I mainly focus out of, know me as, the guy who comes with 6 units or larger. And now that could be a 50-unit building or a 6-unit apartment building. And so I've had a lot of success flipping and wholesaling and holding the 6+ unit buildings. So that's really where I focus my time. I try to stay away from the residential space for that reason exactly.
So I think on your YouTube channel you just posted a walkthrough of it looked like a duplex.
Yep.
Are you going to do co-living in that?
So that one we bought as a flip, right? So I'll just give you the numbers. We bought it for 275. We're going to stick about 75 into it. It should be worth roughly 500 when we're done. Knock off all the fees and everything else we have to pay plus holding costs. It should net about 100 grand, right? So if it sells for that, we'll let it go. If it doesn't, it's got 9 bedrooms and 4 bathrooms in it, and it's directly next to Providence College. All the homes around it are all student rentals. And so, you stick a student or, students in each bedroom, $700-800 a month, you're looking at, between $6,500 and $7,500 a month in gross income. And so if it doesn't flip, it's now going to make $2K in net every month in income. And so those are the kinds of things that go through my head when I'm thinking about flips. The flip is the first exit strategy, but ultimately, if we can't sell it for what we want, what is it going to look like? And are we willing to eat that? Or is it still going to make money?
Right. No, I like that strategy because that's kind of what I've been looking at. I started buying years ago. I was flipping in the Bay Area when I lived in the Bay Area. And then I started buying houses in the Midwest and duplexes and fourplexes. And those are okay. But, when you're a couple thousand miles away, it's still just hard to manage the small properties, although I have property management. And then I was like, okay, well, I moved here to Las Vegas. And now I'm like, well, what pencils out here, which is very difficult to pencil anything out. And then I thought about doing like duplexes and fourplexes that I could do furnished rentals for like traveling nurses and like not short-term rentals because that seems like a little bit too much work for me. But I think the midterm stay would be because we have so many people moving here. So I think that's I like what you're doing. I'm kind of thinking out, to myself, like that makes sense to me. Like if it's a fourplex that I buy and fix up, create some equity, it would cash flow as a long-term rental, but maybe I could get 2x as a furnished rental. To me, that seems like a good play right now. So that's kind of the real estate I'm looking at here, because I haven't bought anything here, and I don't necessarily want to do that many flips. I might do a flip or 2 a year, but years ago I was doing more flips, and just it is a lot of work, a little bit more stress. So I could kind of see the multifamily play being good. And I know where you're at, there's a lot more, the older housing, the small multis, and there's huge opportunities there because they're all like, built in probably the early 1900s and they all need renovations and most people don't have the wherewithal to do that.
Yeah.
So
the other thing we see a lot up here in New England is a lot of people want to buy 2s, 3s, and 4s to house hack. And so you've got multiple different exit strategies by buying a duplex or a triplex or a quad, really. And so that's why I like those for the flipping model. For the buy and hold, not so much. It's actually really, really difficult to find a property that is going to cash flow if it's a duplex or a triplex, unless you're doing like student rentals or something like that. But for your traditional long-term rentals, it's very difficult to make numbers work on a 2 and a 3 family, like it is pretty much everywhere else. And so that's why I focused most of my energy and time in doing the 6 units and larger, because the more units under one roof, typically the price per unit starts to shrink, and the numbers just get bigger, and so the spreads look a lot better.
So what do you do for, like, how do you get these deals? I mean, obviously you're building a name, so you got probably wholesalers and so forth. Are you doing direct to seller, or what kind of marketing?
Yeah. So, I mean, it's not that big of a market up here. So everybody knows each other. And so I actually do direct mail for the majority of mine. And a lot of people, to be honest with you, I don't know anybody else who's doing direct mail for that size property. And so I don't feel like there's actually that much competition. And so I've had a lot of success doing direct mail. It could be 500 letters or 5,000 letters, depending on what it is, depending on what I'm looking for and what's going on in the market at that time. But that has been my go-to. And that's been my go-to for flips, for wholesales, and for buy and hold using direct mail. I've got, a plethora of agents who send me stuff all the time, and wholesalers and stuff, of course. But really for the bigger things, direct mail has done the job.
Interesting. I just interviewed somebody else, and they said that's what their go-to. I think it becomes a numbers game. These guys are, have it down to a science too, obviously, by testing the letters and things they do. So, I mean, it seems like you got to be consistent, right? Most people that do direct mail, they do it once or twice. It doesn't work the way they want. You got to do this for years and years.
That's exactly what it is. It's all timing. So, you could send, 50 letters to somebody every single month, but then, that 51st time you might get a letter and boom, you might make 50 grand, right? I mean, it's all timing. And so, the larger you can get, or the more specific you can get on what you're looking for, and just repetitively just keep doing it, it will work eventually. You just got to stick with it.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
So what's different now, like going into 2023, that you're going to be focusing on? Like, is it seller finance deals? What do you think is going to be the sweet spot?
Yeah. So that's a good question. I've really focused on the Burr model for a while. And I feel like that's posing a challenge now, right? Because you've got interest rates higher, cap rates are rising, and therefore, 6-12 months from now, is that value going to be where you think it's going to be? I don't know. So probably not, in my opinion, right? I think it's probably just going to keep coming down little by little. Where it ends, I don't know, but it's hard to go in and buy something for $1 million and think it's going to be worth $2 million after you put 350 grand into it to be able to pull all that money out. So I've actually pumped the brakes on buying them for myself, unless it's an absolute killer deal. And the rest, I'm, sending them to other people, assigning them, flipping them, doing, something along those lines. I'm really not banking on the buy and hold at the moment. We'll see what happens going into next year. But yeah, that was my pivot. It went from let's buy a bunch of multis and hold them all while everything's appreciating. But now that it's not, I would rather not take on that massive risk of not being able to pull my money out. And I'd rather wholesale it or assign it or flip it to somebody else.
Yeah, and I mean that's pretty smart, because let's face it, like when the ocean is going in your favor and you're swimming with the ocean, you're going to go a lot farther. Like like the amount of appreciation that happened over the last, which was surprised me during COVID, what happened, but surprised a lot of people. But a lot of people got were buying and they didn't get scared and they reaped the rewards. Like you over the last since basically like 2014, it's been just an amazing bull run, like probably one we haven't seen, where property values have gone up so much, especially on the coastal communities. I mean, like just everywhere you go, so I agree with that philosophy, because like you should go in when the going's good, when it's good, right? Like, and you can get those momentum plays. Like I've been saved a couple times because of market appreciation on flips, right? Like now you're not going to be saved. You're probably going to get more of a haircut, right? Like, so you got to just, so your play this year going forward is transactional, make the money,
Yep.
stack the cash, and then
Yep.
wait for the right buying opportunities.
100%. I have a development deal under contract that we were going to go through with the full build. It actually came from a letter, and we're talking multiple millions of dollars that we would have had in profit, assuming that the market continued the way it was going to go. Well, now my partner and I are sitting here and we're like, all right, 12 months when this thing is done, where are we going to be sitting, right? Like, do we just sell the plans right now with the land and just move away from it and shave half the profit off? So ultimately, that's what we're going to do. And the reason we're doing that is because I would rather be very, very cash heavy right now over the next 6 months, just to see what's going to happen. And worst case, what's the absolute worst thing that happens? You've got cash sitting on the sidelines you can deploy, right? And so I'd rather not, get a massive, even though my hair's short already, even shorter, in the next coming year or so. So
yeah, and there's something to be said about like keeping your stress level at a certain level, right? Like that's what I'm like, you know what? I don't need to be the biggest, baddest, fish in the pond. It's that, like, I would rather have peace of mind and be able to sleep going, okay, well, like, this is a big project. We have like X amount of thousands of dollars in this project. And like, if it doesn't work out well, then I'm going to be stressed out for a little while. And
yeah,
especially at your age, like you don't need to rush, right? Like you're 28 and you already have achieved a lot. And I think like people that are listening to this or watching this in the future, like just take it step by step. Start with that first duplex, right? Like,
yeah.
If that duplex turned into 250 units, right? Like that's pretty amazing at 28 years old. If you just take calculated risk going forward, nothing too crazy. It's like, the time you're 35, it's like you're going to have everything you ever dreamed of and more, right? And so why, like I see people like, you see people, they have success and then they like go all in and like they don't have that like that catalytic converter on their car that like says, hey, like you have to like just be careful. Mm-hmm. And it sucks when you see people like have huge success and then like they like just over leverage and then they get wiped out. It's not worth it.
Yeah.
Like it's not worth it. It's better to take those steps. And I mean, you have to take certain risks in life to get to where, to advance the needle. But I also think like you can do it very systematically and like always have a little bit of reserves, a little dry powder, because that dry powder in the bank, I notice the more dry powder I have, even though sometimes it's not working for you, it gives you the level of confidence, right? Like
I was just about to say that. I went so long being so cash strapped because I was just buying all these multis and they weren't making a ton of money, right? And so I'm always like teetering on the edge. Well, I can't buy that. If this breaks, what am I going to do, right? And so then as I got into this mode of just accumulate and just trying to get as much cash as I can coming in, I've been able to be, like you said, I feel much more confident doing everything because I know I can weather things. And that, I think that's huge. And it's something that I get it when you're starting. Almost everybody doesn't have that. And so I get it. I've been there. But once you can start to build that cash reserve, honestly, I know everybody says, cash in the bank it's terrible, but invest it all, inflation. I don't really care. I want to have as much cash as I possibly can in the bank so I can go and do things like this, do a development deal, do it, flip it. If I lose 10 grand, 20 grand, it's not the end of the world. Right. I do want to give an example real quick. I bought a property. I bought a 13 unit property about 12 months ago. Rates were 4.25 for commercial. I bought this thing with hard money, 80% loan to value. So we put $200,000 down on a $1.6 million asset. I finished all the rehab and then I go to refinance. And now the rate, instead of being 4.2, 4.5, even 4.75 is 6.5. And so all of a sudden, I can't pull out the $200,000 plus the rehab out of it, right? Now I have to bring $50,000 more to the table just to close the refinance on this property. And so that to me is a sign where, okay, I'm going to have to leave a ton of money into this deal. Sure, it'll make money and it'll do well, but imagine if I had 10 or 15 of those going on like I did 2 years ago. Like, where am I going to come up with all the cash? And not only that, but if I have to sink all the cash into it, I'm not going to be a happy camper, and neither are my partners. And so that's sort of why I'm pumping the brakes on buying every single thing I see now. Don't get me wrong, I'll still buy a property if the numbers pencil out and it looks good. But things that are a little bit dicey, I'm kind of, assigning them or flipping them to other people. So
Yeah, I think that's smart. I mean, a lot of people being in the lending business, right? I hear the horror stories all the time.
Mhm.
And like I'm getting all these calls or these messages through Facebook like, hey, I'm in this flip and we got to refi it because it's not selling. It's like, okay. And then I gave him a quote. I go, well, we can do 70% cash out on this, what you're looking to do.
Yeah.
He's, well, I still need 125,000. It's not going to work. Well, you're either going to have to sell the property at a discount or you're going to have to come up with 125, and
Yeah.
it's a hard conversation, especially if that's they don't have any money, right? Like that was,
Yeah.
they're banking on that. And I feel for people like that. I hear all these horror stories all the time. So like, you have to be aware, like, I think like in social media, everybody always talks about their wins, right? Like everybody is like, we look at everybody and we're like, man, how did that guy do that? How do you do that?
Yeah.
But we don't know the real story. And then you find
That's
out
true.
like something happens and like, the guy's going to jail or whatever, right? Like, so what I try to do now is not look at other people, right? Like just worry about myself and like,
Yep.
hey, that's great what they're doing and they're crushing it or whatever. They're at least, but you can't believe social media, people embellish and like don't tell you the actual truth, because anybody doing real estate in the trenches can probably tell you it is one of the best ways in the world to make a living, for sure. I would that's true, but it's not easy even when the markets are appreciating like crazy. Sure, we hit home runs every once in a while, but nobody talks about the stresses that there are, right? Like the reality of it is, it's like, yes, a lot of people want to get into real estate, but it's a very, very difficult business. Like you have to be able to weather storms like you were talking about.
Yeah, not only that, but every day you don't know you have no idea what's coming next. And so you need to be able, as a human being, be able to handle a lot of different things being thrown at you and come up with a game plan on how you're going to do these 50 different things that just happened. And 9 times out of 10, they're stressful. And so like you said, you got to be able to manage that. And I think being young, I don't like, I'm all like, all right, let's keep going, let's keep moving. But at some point it's going to be like, okay, like where is the peace of mind where I can just like step, when I can pump the brakes a little bit and be like, all right, I feel good about where I'm at. And so I just, it's a lot of, real estate has the notion that I'm going to buy rental properties and I'm going to go sit on the beach somewhere, right? There is none of that whatsoever. Like it is just, you're figuring out how to grow a business from scratch, essentially. And it's challenging. It really is. It is challenging. So I agree.
When you were starting, where'd you kind of get, like, who were your mentors in the business?
Yeah, I had my uncle who, like I said before, he had owned some multis and he had owned a construction company. And so I learned from him on deal number 1. Deal number 2, I house hacked. And so again, he actually lent me the capital to buy that house hack. I think I had to put like 30 something grand down and he held the rest of the note for me. And then from there, I partnered up with a guy local who had 50 units already because I got really good at finding deals through direct mail. And so I like to say that all my partners have been my mentors so far. That, every partner I've ever partnered with has some sort of unique skill that I've been able to take and possess and learn from and move forward with. And so, yeah, I would say that, a lot of people don't, they look at partnerships as it's a little bit risky. I love them. I learn everything I can from partners by doing deals with them. And then I take that and I move it on to the next one and keep it moving.
What's been kind of like a deal that's gone sideways that you had to fix and it was like, you lost some sleep over?
Yeah. So a single family flip. I bought a single family house. I lived in it for a little bit and I did some work to it. I thought I was going to sell it and make a quick buck and ended up losing 40 grand on it. That should have never happened in the first place. And what did I learn from that was that I should not be doing something that I'm not. Number one, I don't love single family. I don't love the residential space where it's, you're attracting, long-term homeowners stuff. I don't like that space. And so I jumped into one, thought it was going to be great. And it turned out pretty poor. And so from there I said, you know what? No, I'm doing multifamily property. I'm doing multifamily flips, and I'm doing multifamily buy and holds, and that's it. I'm not even entertaining the $200,000 single family flips. Not happening.
And what about? Thank you for sharing that. What about a deal that you did where you're like, it was just kind of like a home run for you, and you're like, this was like a sweet deal, and like just something that you'll never forget.
Yeah. Actually, about 11 or 12 months ago, I got a call back from a guy who owned a 6-unit in Pawtucket, Rhode Island, and I go to meet him at the property. It's probably worth 650 grand, and the guy's like, "Listen, give me 350K in cash and close in 2 weeks, and we got a deal." I bought the property, turned around and sold the property, and we made 250 grand in like 4 weeks. And so that to me was like, okay, I did almost no work. I literally did no work on this thing whatsoever. My partner actually found the buyer, did all the pay, everything. And I was like, wow, this is, if they weren't all like this would be awesome.
Yeah, that's what you call a home run right there. And like, I think if you make your attempts at bat, like if you go to, you're gonna hit those home runs. Those come along, maybe it might be every 30 or 40 or 50 at bat, but
Yep.
when you hit those, I mean, that's like, it's a solid year of income, right? For most people. Like,
Yeah,
they'd be like,
that right there was my wife and I's income for the last 2 years combined in one deal. And so, those don't happen very often. I know like I said, 30 or 40, it might even be less than that, right? It does a lot of, 15, 20, 30, they're all good, right? I mean, do 5 or 6 of those a year and you're already at $100,000, right? But there's a lot of those base hits, and then every now and then you hit those grand slams.
Yeah. That's so. What advice would you have for somebody that's listening to this or watching this, and they're 25, 26, they hate their job. They're highly educated. They got master's degrees, and they're like, man, I want to be an entrepreneur. I want to do my own thing. Like, and they want to get into real estate. Where would you tell them to play? Would you just say, hey, get a mentor, get into like the duplexes, fourplexes, multifamily space?
For me, that worked great. I know some other people who jumped in and did 10 units when they started, and I know other people who did $40,000 homes to start. And so I think it's going to depend on, okay, who do you know right now, and what are those people doing? What do you want your life to look like? And the first thing you need to do is just get in the room with those people. I don't care what you have to do. You got to get in the room with people who are doing the things that you want to do. And that could be spending money to be in the room with them in a mastermind. That could be buying 20 books and reading them in a 12-month period, watching YouTube videos, whatever it may be. You need to get in the room and learn from people who are doing what you're doing. Nobody can just jump into something and figure things out on their own. Everything in real estate is a team. And so you've got to be able to get around people who are doing it. I guess that's the summary. You got to get in the room with people doing big things that you want to be doing.
Cool. And so what rooms like did you get involved in? Like, what
Sure.
mastermind did you like that,
Yeah.
helped you in the real estate game?
Yeah. So, well, first of all, I had my uncle. So I was lucky I had a family member. But if I didn't have a family member, knowing my personality, I would have just found the next person in line who was doing what I wanted to do. Because I did. Right after him, I found a partner who was buying 10-unit buildings, and all of a sudden I learned about 10-unit buildings. And then after that, when I had moved to Rhode Island, I joined a mastermind around here because somebody found out that I had owned 100 units, and they were like, "Dude, you got to come and chat with us." And so there's now 6 of us in this small mastermind here in Rhode Island. And some of these guys are making 5, 6. One of the guys is making $1 million a month in this mastermind. And so I'm sitting here, when I joined, I was like, 26, 27. And I'm like, this is incredible. Like, I need to get myself around more people like this. Right. And then I joined GoBundance. And then I'm in other mastermind groups now. And so it's always trying to get in the room. And I know it's cliche, but trying to get in a room where people are doing things that you don't even know how to do, because you don't know what is possible until you actually learn about things that are happening.
Yeah. It's interesting. Like, the guy that's making $1 million in your mastermind, did he do that mostly through real estate?
He is crazy. He did 530 transactions last year as an agent, and then he flipped 100 homes. And he's an impressive guy. But yeah, so it's mostly through real estate, but then he's got a plethora of other businesses that he's purchased along the way.
Yeah. I mean, that's a good problem to have. $1 million a month, like cash.
It's pretty wild. Yep.
And what does your day look like? Are you very regimented or?
Yeah. So still to this day, I'm the only person I know who gets up at 4:00 in the morning every single day.
I do too.
There we go. Perfect.
There you
Perfect. I was actually reading a book, the guy who owned Walt Disney for 15 years. The first line in the book's like, I get up at 4:15 every single day, and for 2 hours, no one bugs me. That's my time to think, and that's where my best ideas comes from. And I'm like, hey man, we must be related. But no, it's 4 a.m. every day. I'm reading. I'm focusing on what I have to do for the day for the first hour. Then I exercise. After that, I work pretty much all day long. Whatever's thrown at me, wherever I have to go, walk this property, talk to this person, do awesome podcasts like this. This is most of my day, but luckily I can do it from my home.
Yeah.
And so that's the biggest thing.
Awesome.
Yeah.
Guys, I hope you guys are inspired. 28 years old, guys, 250 units and growing, and, just giving you solid advice about what he's doing. And, this year because the market's shifting, he's shifting a little bit. You have to be able to pivot and shift. I think that was a big highlight of this conversation. Ryan, where can people follow you? Where's the best place to send them?
Yeah, so I've got a YouTube channel that I'm trying to get off the ground. I've been terrible with social media for the last couple of years, but I'm starting to ramp that up as well. So it's RJ Corcoran 08 at Instagram, TikTok, and then Ryan Corcoran on YouTube. Reach out, ask any questions. I do my best to reply to everybody, but sometimes I get inundated and I can't, so I apologize. But yeah, I do my best to answer every question.
Cool. Well, guys, I hope you enjoyed this show. We'd like to bring on different investors throughout the nation to talk about strategies and just, you got to get a game plan. I guess more of the story is like, you got to do it. You got to put yourself in the room with people that you want to level up to. And if you could do that continuously, and also I think being disciplined, meaning like not everybody's going to be able to get up at 4 a.m., but Ryan and I share that. Like I get up and like, it's true. It's like the morning, nobody's bugging you. Your phone's not going, your social media is not pinging. You can think, you can do like what Cal Newport, his book is called Deep Work. I believe you can do the deep work in the morning. And then you can, we can end our days a little bit earlier because we go to bed earlier, obviously. Like I try to go to bed at like 8:39 latest.
Yep, exactly.
And then I'm up early, but you accomplish a lot, you hit the gym, and then you're hitting the work day like way before anybody. So like I always tell people I feel like I can outwork people this way, like because I can work like almost like two, even though I'm not working that many hours, but I'm working almost like for every day you work, I'm working 2 days just because I'm getting up early.
Yeah,
and
I feel exactly the same. And then, but majority of the days by 1 or 2 o'clock in the afternoon, I've already put in what everybody else just started a couple hours ago, right? And so, and by 5 or 6, I've been done. I've been checked out for a couple hours, and everybody else is just getting home. And so it's nice to be. I always feel like I'm ahead. I feel like I'm ahead of everybody because I'm up so early. I think it's huge.
Love it. All right, guys, we'll see you on the next episode. Ryan, thanks so much for spending time with the Investor Financing Podcast.
Yeah, this has been great. Thanks, Beau.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.